Welcome, everybody, to the Chinchilla Pickin' Podcast. It is January 26, 2025 at 3:27 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only, the, I don't know, bountiful hair Brandon Beaver because he
Bountiful
has
hair. I am
long
growing
hair.
it out.
You need to get a haircut.
No, dude, I got a couple more inches left. I might shave a little bit off here at the bottom in the back just to, taper it off a little bit. But nah, it's growing out, man. I'm gonna
Let's
be
buzz it and turn it into a wig for myself for when we do our first. So if you're listening, we're gonna start doing video shows. So if you want to see Brandon's hair chopped off and me wear it as a wig, if you get us up to 1,000 followers on every social media account, we'll make that happen. Brandon,
No,
you
I'm
good?
not chopping it off.
Yes,
It's not coming off.
yes,
No.
yes, yes.
So episode 200, we don't have a date for it, but we're just telling you episode 200. That's going to be our first YouTube show. We're obviously going to stay on the same platforms that we're on right now, so you enjoy listening to us on Apple Podcast or whatever you're listening to us on. We'll still be there. TuneIn Radio, we'll still be on it, but we're also going to be on YouTube. Finally, finally,
Finally,
we've
people
got
have been begging.
yeah.
I've,
So
I've I've had people lining up at my house saying, "When are you going to be on YouTube?"
if we
Finally,
if you already know, we have a channel on YouTube already, but it's just been used to publish advertisements for this podcast. So we're gonna we're gonna up the ante on episode 200. It'll be episode number one on YouTube.
hey, I got my ring light just for this, so I look brighter. So I'm good. I'm good, and I'm losing weight just for this YouTube show.
I'm gaining it.
Yes, Brandon's
Yeah.
taking my weight that I'm losing.
Yeah.
We're good. We're ready. We're ready to rock. So you didn't come to listen to us rant about this stuff. It's finance, right? Finance. A lot of things happened last week. I know I posted about it on TikTok. So if you follow us on TikTok or Instagram, you saw the reel, you saw the TikTok. I talked about how we got Netflix right. Um, that was great. G Vernovo, I made some quick money off of that. I wish I would have, because I was gonna buy one, Brandon. I was gonna day trade one, because I have a day trading account. I don't put a lot of money in it, but I have a day trading account, and I picked G Vernovo instead of Netflix. I did make money. I was profitable. Don't get me wrong, but Netflix would have been the better play. Hindsight's 2020.
Yeah. 14% increase after earnings.
Killed it. I
Yeah.
mean, we called it on the show. I know you're going to get into it, so I'll save. I won't steal your thunder. I'll just talk about we called it last week. We both agreed it was going to have a good quarter. We just didn't know about the future going forward, so they gave some guidance. I'll wait for you to talk about the guidance. But G Vernovo, since neither of us are going to talk about in the show, let me just do 30 seconds on this. If you want to weigh in, weigh in. They had a decent quarter. It kind of came in line of what they were expecting. But the thing with G Vernova is the future of where it's going to be at and how it's going to power different data centers and so on and so forth. And that's the investment play there. So, anything to add?
Well, I made a mistake by selling it after the split. Made good money on it, but I should have held on to it. So now I'm kind of looking for a re-entry point if I do go back into it.
Well, you made good money. So, I mean, a profitable trade's a good trade.
Yeah, I more than doubled my money on it.
Psh,
So
come on now. Sprinkle that. All right. Rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're to lie back and forth, the bicker and the banter right here on the show for you. Brandon, take it away.
Netflix earnings. Let's dive in. We did get this right. 14% increase after the earnings were reported at one point on Wednesday trading. The stock was at about $999 a share. That surpassed the previous intraday record of 947.75 a share. So, good news for Netflix here. I'm a little bit skeptical on one thing here, but they announced price increases again. They didn't tell us the magnitude of the price increases, so we don't know how high they're going to go. But man, this is
They
a
did.
Yeah.
They broke it down.
I didn't see a breakdown on this, and I didn't even hear it
You
on the
didn't?
conference call. No, I just know that that the United States is
Yeah.
going to see price
I
increases.
I saw a breakdown. I know my current Netflix plan. I currently we're paying $15 a month for the no ads. Right. I just wanted a
Yeah.
premium no ads, and it's for my daughter and myself. And I think mine's going up to $18 a month, so like $3 a month more for me.
I don't like it. I don't like it,
Yeah,
but
well, they're what
I
they're doing is
understand it.
they're raising everybody all the premium stuff like $3, $4, $5 a month, but the ad supported tier is only raising like $1.50. They want people to go to the ad supported tier because they
Right,
make more money. They make
right,
more money off
right,
of it.
right. Which is what I'm on right now because I spend way too much money on streaming as is.
Well,
So
a lot of people do, but that's why and I find before you get into it, I find that weird nowadays, Brandon. That when people come to me and say, "Hey, have you watched this show?" and I'm like, "No, I haven't watched that show. What's it on?" and they'll be like, "Paramount," right? I'm like, "I don't have Paramount," and they just look at me weird, like, "You don't have Paramount?" Or if they say Apple, I'm like, "I don't have Apple." You don't have Apple?
yeah,
I'm like, am I expected nowadays in 2025 to have every single streaming service?
but
Because that's ridiculous.
we've
All
got
right.
Paramount.
See,
We've
okay,
got
so you
Paramount.
have all the streaming
Yeah.
services, and that's why you're going
Well,
broke.
we don't have
You know,
Apple. We don't have Apple. We've got Paramount. We've got Peacock, and we got Netflix and Amazon, and yeah. So it's and
so you have a
Hulu is
lot.
the biggest one because
So,
that's
all
where we
right,
get our live TV.
I have Hulu Live, like you. I have Hulu Live, and it comes with Disney Plus and ESPN Plus, right?
Yeah,
So I have that, and then I have Netflix and I have HBO Max, and that's it. I don't I don't have enough time in my day to watch any more than what's on those. And I
yeah,
got my Hulu Live because I like live sports, which is I'm glad it gets ESPN Plus because I like boxing, I like MMA, I like the fight sports, like
yeah,
Brandon, and college football. I love that. So in the fall, I love having my Hulu Live and all those channels. That's my favorite thing in the world. Not in the fall, I get other different sports, and I get CNBC, Bloomberg News,
yeah,
Cheddar News. I get all these stock news stations, which I love watching live. I know you're going to say they're talking heads, but they give you that live news, and so I like that aspect of Hulu Live. All the other stuff you could take and
we,
keep.
we also have NBA, so I don't even know how much we pay for that every year
I didn't
to
even know
watch
you
all the
watched
NBA
NBA.
games.
I knew you were a Cowboys fan.
I
Are
told
you
you
a
I was a
Mavericks
Mavericks
fan?
fan. I talk about the Mavericks all the time. I'm surprised you don't know
No,
this.
you don't.
My
You
girlfriend's
never
actually a
did.
bigger my
What?
girlfriend's actually a bigger NBA fan than I am, so she watches all of the Mavs games. So that's why we have
Really?
the NBA streaming app. Yeah, but also if you have the Meta Quest, you can use the X Stadium app and you can jump into these into these games and watch them on the Meta Quest on the big screen TV, if and then sometimes they have it in the NBA stadium on there where you can it's like you're there, right?
Yeah.
So that's kind of cool too. But um,
Yeah, I use my MetaQuest for gaming mainly.
yeah, we'll use the X Stadium for the NBA, and you put in your NBA credentials and you jump on there. They got the multi game, so they got the big game on the TV that you want to watch, and like there's 4 or 5 different screens on each side of the game that show you all of the other games that are going on too. Pretty cool.
That is kind of cool, actually. That is kind of cool. Anyways, Netflix, go ahead. Bring us through.
So for the fourth quarter, they were reported earnings per share of $4.27. That beat the consensus estimate of $4.21. Revenue for the quarter came in at $10.25 billion dollars. That exceeded expectations of $10.1 billion dollars. They added a net total of 18.9 million paid subscribers during the December quarter.
Held
They
it
were,
there.
they were projected for 9.8.
Doubled it.
Yeah.
Do you think that was all because of the Tyson Paul fight?
I don't think it was all because of that. So I think Tyson Paul contributed to it. I think the
Squid
second
Games?
season of Squid Games, yeah. Um, and I think this keeps getting swept under the rug, but I think Monday Night Raw, WWE's programming going to Netflix added a lot. That's a global product. So,
So it's the live events is what's driving it.
Yeah,
So
yeah,
people are loving the live
yeah.
events.
And the WWE fans are very loyal. They're gonna
Yes.
watch no matter what. They're gonna pay no matter what.
Yes.
So, they said that that was the biggest quarter of net ads in their history. They projected the 2025 revenue to be within the range of 43.5 billion to 44.5 billion dollars. They said that, and this was a quote, their Q4 slate outperformed even their highest expectations. They said that they're maintaining a leadership position in engagement, revenue, and profit. They're committed to improving all aspects of their service. Um, so yeah, good quarter here. They announced that they would increase prices, like I said, on most plans. They said the countries they're increasing prices are on they're the United States, Canada, Portugal, and Argentina. So,
Nice.
I mean, that's pretty interesting. They picked those four countries and Argentina, a country that I've been bullish on for about a year and a half now. That just shows me that they think Argentina can handle price increases now. So that's good. They did not in the call at the time. I don't think I know you had them. I did not hear the specifics of the price adjustments, but you just laid them out. So that's good. They also approved an extra $15 billion in stock buyback. Um, they've the stock has surged nearly 80% in the past 12 months. One of the things, all of those good things are good news, right? But what broke out to me and what I saw, because I dug into the numbers and I'll go into them a little bit deeper here. First of all, return on equity, 38.4%.
Okay.
That's huge. That's very huge. Um, and then their debt. Their debt, they're planning on paying off $1.8 billion this year. A lot of these streaming companies are going into large amounts of debt in order to try to catch up with Netflix, who has obviously a very large head start on all of these other streaming companies. Normally, I would say 38.6% is relatively high, but for them and the amount of revenue they're bringing in, the debt to capital ratio is 38.6% for Netflix. Comparatively speaking to the rest of the companies in the industry of streaming, that's pretty low.
Yeah.
And with the amount of revenue that they're bringing in, it's no problem for them. Another thing that jumped out to me too was the margin, earnings before interest and taxes, 26.7%.
Okay.
That's up from 20.6% in 2023. That's a big deal. Um, They raised their revenue forecast, like I said, to 43.5 billion, 44.5 billion in 2025. They increased their operating margin target to 29%, so going even higher on the profitability. Kind of makes me a little bit concerned about those price increases. Why do you need to do it? Your profit's already there, right?
Pay for
And
programming.
what's going to happen to those subscribers on the top end? I know they're going to switch to ads, which is actually better for Netflix and it's actually profitable for Netflix. But
They hope they are, but I'm not.
what percentage of them are going to leave Netflix and go to other platforms?
If
That's
if if
my
it
concern.
nobody none of them I don't believe is going to leave Netflix. It's going to be minimal to small. I know for myself, I'm not switching to ads. No. Yeah, no, the ads. No, that's not. That's I don't want ads. I don't want to be bothered with ads. I'll pay the extra $3 a month and keep my no ads.
It's just it's a little concerning to me because people are tired of the price increases, and over the past few years, Netflix has had a pretty large number of them.
Yeah, and but their programming has improved.
It
Their
has.
programming, their offerings has improved. So it
I
that
don't
you
know
could see where they're putting their money. The thing is with companies like Disney Plus and their price increases, where are you putting the money? Because your programming's still awful. You've
has
had a
it
couple
though.
good shows.
Has
You've had a
Netflix?
couple good
I
shows.
mean, no, I know Tyson and Jake Paul, right? One time thing. Squid Games is a big deal, but Orange is the
Witcher.
new
Witcher's
has
huge.
has anything beat Orange is the New Black?
Witcher is huge.
With who?
There's a
I never heard
mass
anybody
following
talk
for the
about it.
Witcher
Really?
series.
Really?
Yes.
Okay. I
Yeah.
started
And
watching it. So here's the thing. I played the video game for about an hour and I quit because I was bored.
oh, what? Which one? There was
The
three.
Witcher. I think it was two.
You The Witcher 2, that
Yeah,
video one. Witcher 3 was the best one.
really.
That's more about what the TV show is more from is the third Witcher game. However, Netflix has had a lot of movies that have been huge hits, especially the ones with Ryan Reynolds. Those have been huge. They've had a lot of movies on their own that have actually got nominated for awards. Netflix movies are taking off their shows. Bridgerton, that's another one that
Yeah.
has been big. They've had some big shows. They've had some big movies.
We're skipping over the most important one and the most, in my
Oh,
opinion, Happy Gilmore 2.
okay. Yeah,
That
whatever.
is gonna that is the one I am most looking forward to.
I thought you were going to go with wrestling, but the Happy Gilmore too. Okay.
Happy Gilmore
Um,
2.
but you see, they're putting their money into actual product.
The price
So
is
that's
wrong,
what's keeping
Dave.
people.
Okay, sorry.
I got the joke. I don't think any of our younger listeners will know what you're talking about. Maybe they will.
Go watch Happy Gilmore 1. You're welcome.
Um,
What?
so Netflix, man, I think here's the thing. Uh, they got to keep the subscribers. They keep the subscribers. They have another good quarter. If they lose all these subscribers they just got, that's going to be the problem. That's going to be the issue. They have the product to keep them. They have good shows. They have good series. They have a live cooking show that's every Tuesday. They have all kinds of different things going on at Netflix that could drive individuals in. But I'm just not seeing it.
Yeah. Okay. So here's the thing. I'm going to give you this one because Netflix, I'm seeing this now, had more number one shows in weekly streaming top 10 charts than all other streamers combined for every week of the year
All right, so
last year.
if you can't see me actually dropping my mic because of my blurred background, but I'm dropping my mic, Brandon, because yes, Netflix has some hit shows. So yeah, sorry,
Yeah.
buddy.
They're expecting to double advertising revenue in 2025.
If they keep the subscribers, then yes.
Yeah.
If they keep the
So
subscribers, yes.
So this has been kind of, I think, an ongoing commentary on the entertainment industry, the death of traditional television, right? That's been like for about 10, 15 years now. That's been the conversation since really Netflix started streaming. I would say, what was that? Probably 2011, somewhere around there, really.
But we
So,
got into streaming to get away from ads.
yeah, and now we're getting
That's
them
my
back.
big pushback.
So let's look into Nielsen's November 2024 data. They show that TV viewership broken out as this: 41.6% video streaming, 25% cable, which I'm surprised it's still that high,
Sports.
23.7% broadcast, and 9.7% other, which I'm assuming is the internet
Sports
somehow.
is the main driver of the broadcast and cable. Sports.
Yeah, it has to
I
be.
guarantee you it's sports.
It's got to be.
People
So
still
here,
want to watch their sports that they love, and you have to have a some sort of like we have Hulu Live, you can have YouTube Live, you can have Fubo TV, or you can have cable. You got to have something in order to watch your live sports.
yeah, 10 years ago, cable TV, paid cable TV had 100 million subscribers. Now they've got 68.7 million. I'm surprised it's that high. Um, in what CFRA, the analyst that does reports that I actually respect on stocks, um, they think TV streaming substitution from pay cable TV to will actually accelerate. It's actually going to go higher into streaming.
Well, yeah,
So
but here I hate that they're adding ads. Like, get away from that. I stream to get away from ads.
I think people stream to get away from ads and also stream to get away from the price increases that the cable TV providers were implementing every single year.
But now we're getting at the streaming services.
So, yeah, but then the update to I mean the other side of that for the ads is if you could save money with the ad tier, 7.99 for Netflix a month going to 9.99, for example, then people are going to choose that because of the, money talks. That's that's it. Money
Yeah.
talks. But I got to tell you this right now, I'm spending tons of money on Hulu Live and I still get ads.
Right.
Yeah,
Well,
it's annoying.
anyways, going forward, moving forward, Netflix as an investment, buy, sell, hold, neutral, whatever you want to call it. How would you grade this?
Buy.
Overweight, underweight, equal?
Still a buy, even after
A
an
buy.
80%
Okay.
increase. Yeah. I mean, we always preach to not chase the dragon, but there's nuances to the stocks, right? If they're justifying their current valuation, then it's fine.
I'm neutral.
Just
I'm
because
not.
of the increase, you think that we get a
They,
recession, maybe we get a pullback on this, or a correction in the stock market, then you get a pullback, and then would you buy like if it's 10% decrease?
so they gapped up a lot, yes, based off subscribers. Can they keep the subscribers? And what tier are these subscribers staying in? Are they in the ad tier? Well, then great for Netflix. It's a buy. If the subscribers are not staying, its valuation is right where it needs to be. It's actually kind of high. Um, if they are staying, but they're in the premium tiers,
Yeah,
still a buy because
yeah.
I
I'm
think
not.
they'll move to the ad tiers.
It's not a screaming buy. It's just
Yeah.
this would be okay to add to your
I
portfolio.
say neutral. I still say that's why I say
Okay.
neutral. I want to see
All
if
right.
the subscribers stay.
You know what
I
we
don't know if they will. I don't know if they will.
I'm going to transition. It's going to be kind of a hard transition here, but that's fine.
Transition. Let's go. Let's move. What's
We
next?
talked about going into last year. I expected a recession because the increase of interest rates, the pullback of credit, and all that stuff is usually what leads to a recession in the United States.
And
Here we
were
haven't
you
seen,
right?
huh?
Were you right?
No, but here's the thing: is it's happening in the UK. Somehow, it's happening in the United Kingdom. It's not happening here, but it happened in the UK, and they seem to be in a technical recession right now. Some analysts are saying they're on the verge of a worse year this year than they had last year. Q1 earnings for companies in the UK were actually pretty good. The growth, I mean, they had a strong start to the year for Q1 and Q2, and then Q3 and Q4 was not good. It was negative.
A lot of UK companies though are global companies. It's not a UK um itself company. You know what I mean? There are a lot of American companies that are American focused versus UK. They're kind of all over the world.
So I'm going to cite a Big B's trainer study. On Friday, they said that the UK Business Recovery Financial Advisory and Property Services Consultancy published its latest red flag report, highlighting a significant increase in UK businesses entering critical financial distress in the final quarter of 2024. They said the number of companies in critical financial distress rose by 50.2% in the fourth quarter of last year, reaching 46,853, signaling a worsening outlook for the overall UK economy. The sectors most affected by significant financial distress include construction, support services, real estate, and property services. Those are the sectors that you would expect to suffer the most from a rising interest rate environment. And it's what I expected kind of to see here. Maybe not to that extent, but it's happening in the UK. I don't know if it'll happen here. I know current president, wants to lower interest rates. The Federal Reserve is in the United States still focused and concerned with inflation, possibly going back up. So there's a tug of war there. But they said for the UK, consumer facing sectors such as hotels and accommodation, leisure, and cultural activities, general retailers, and food and drug retailers are also showing worrying trends, which would be the sectors that I would expect to follow as well. I would expect first to see it in construction, support services, real estate, and then consumer facing sectors to come after that. So they said nearly every sector has experienced unprecedented growth in firms at serious risk of insolvency in the next 12 months. The widespread distress underscores how challenging the outlook is for UK businesses right now. And they have a possibility of emergency tax raising spring budget and likely tariff increases from the new US administration. The outlook for the UK remains highly uncertain. Their biggest concerns right now are stagflation, again, something that you would see with rising interest rates in a
They
low
already
job
had
environment.
interest rate. Yeah, they had like interest rates that were sky high and inflation that was sky high
Yeah.
before, because they started raising interest rates before the United States did, because their inflation jumped way before the United States did, but which was exasperated by the Russia-Ukraine war and the cost of natural gas.
Yep. They seem to be in a technical recession, and they said business confidence right now is really, really low.
And are you implying that this is gonna trickle over to the United States?
No, I'm implying that it could possibly.
I think this is a UK problem because they have a lot of issues politically and economically there, especially with the housing. Um, I don't want to get political, but there's a lot of political reasons why their housing is becoming an issue in the UK. They're trying to house more people than what they have available housing for. And so it's causing an issue in the housing market, and you're not getting your rent. If you're a landlord, you're not getting your rents that you would prefer to get.
Germany's facing the same problems, very similar right now. So it's
But
just looking back in hindsight's kind of 2020, it looks like Europe and the UK face the same issues that we did here in the United States, but accelerated. Higher inflation and then higher interest rates, and it was kind of like what we faced here, but more of it.
we did, yeah. We have a stronger economy. I mean, yes, a lot of it's being held up by credit, by these, affirm pay. You could buy now, pay later type situations that are still going on and still growing. By the way, Affirm stock price still going back up. It has skyrocketed to 110, went back down to 11. Now it's back up to like 50, still improving and growing there. So these companies are still relevant and pushing American spending higher, which
Yeah,
is what's helping here and the availability of land.
right.
So we have room to grow, if you will. So I don't see the same issues here that they see in the UK. I'm not concerned about the same type um, of depression or recession. In the United States, I'll be more worried about a different type, such as student loans, which went back to students having to pay those again. The whole like on hold, you don't have to make payments thing went to an end. Now you're gonna have people starting to get in default or make their payments, less discretionary money. On top of that, you're gonna see some of the I would be more worried about credit cards defaulting. Things like that would be a USA problem.
I would want to see kind of results in what the financial health is of Barclays and HBC.
You mean
H
HSBC or
HSBC, that's what I meant. Yeah.
yeah, there are then they bought up the Swiss bank that was having major issues, and I believe they're still working through those on their balance sheet, if
Yeah.
I'm not mistaken.
Mhm.
So, they may not look as healthy, but they will longer term because the things they bought up, the longer term will pay out.
Gotcha. That would be the effect would be on global banking. That's UK's export to the
All
business
right.
world.
Well, let's switch gears here and let's talk about more global partnerships, if you will, global joint ventures, and move into something I want to talk about. How about that?
Cool.
Uh, yeah.
Yeah. Go ahead.
All
I'm
right,
done.
let's do it. Let's do it. All right. So I want to talk about it's an article that actually came out yesterday morning at 6 a.m. The headline reads, headline reads, Rivian says other automakers knocking on door about tech from VW joint venture. That's VW Volkswagen. So what this is about is a joint venture between U.S. electric pickup and SUV maker Rivian and Volkswagen is in talks with other automakers about supplying their software and electrical architecture. The German automaker agreed in November to invest $5.8 billion in the joint venture, which will integrate advanced electrical infrastructure and Rivian software technology for both companies and future electric vehicles. The reason why I believe this is a personal opinion, Rivian is doing this is because Rivian was suffering. The stock was in a free fall. They were not getting the sales they want. They need to find a way to reinvent themselves. So what Rivian has that other companies want is this they've built up an EV infrastructure and an EV software and architecture that can compete, but they're running out of money is what I think. And so they're looking for partnerships. I may be wrong. I may be wrong on that, Brandon, but that's what I see when the stock keeps going down. Um, they some a quote from the chief software officer at Rivian. I'd say that many other OEMs are knocking on our door. Is his quote. That's from Ben Said. Ben Said he's also a co-CEO of the joint venture, declined to provide names of interested automakers and details on what stage the talks were actually at. But he said there is demand. Again, being very vague, adding that the priority until 2027 was to roll out the R2, Rivian's smaller, less expensive SUV, and to integrate technology into Volkswagen brands. Obviously, other OEMs are talking to us, and we're trying to figure out how to support that in the future. Any other OEM who wants to make a leap from technology standpoint, the joint venture today becomes one of the key partners with whom they can make that collaboration. The venture is likely to become the platform of choice in the Western world, apart from Tesla, Canaccord Gentry analysts said in a note. So this is meant to be the competition for Tesla since nobody can compete. So Rivian is doing partnerships with automakers in order to have a competitive edge, right?
Mhm.
First initial thoughts, Brandon, before I go into Rivian's numbers.
I've previously called it the electric vehicle for soccer moms, and I'm sticking to it.
Well, they haven't done well at all, right? So a 6 month chart of Rivian shows a high at 1750, a low just a little bit below 10. Currently, right now, it's sitting at $12.77. So closer to the low. The earnings have been improving, but they are still far from profitable. They have been negative the whole time they've been reporting. Market cap for Rivian is at 13 billion. It's coming in at negative 20.96%.
Wait, what game in it
EBITDA,
negative? I missed.
EBITDA,
We missed it. EBITDA.
yeah, EBITDA margin is at negative 94.44%. Debt to assets is at 58.6% debt to assets. And they have a negative operating cash flow currently. So that's the current numbers. And this is why that makes me think that this deal is because Rivian, sorry, is going down, even though their earnings are improving quarter over quarter, but they're still negative.
Yeah, and everybody was so excited about this stock except for us
Yeah, we were the
when it
only
first
ones
came out.
dogging it like
Yeah,
daily.
I know. And everybody was all on the Rivian train.
Yeah.
Oh, yeah,
Uh,
it was no.
what do you think with this deal, though? If what with this deal, do you think now there's new hope for Rivian, or do you think it's too little, too late, or are they going to sell off the company in pieces to like Volkswagen or some other company and sell it off?
I mean, I wouldn't go that far necessarily yet, but it's a show me company. You got to prove yourself now. You haven't done it yet.
Gotcha, gotcha. I
No,
think that this is a precursor to them being a software company. I don't know if like I don't see a lot of their cars out there like I do Teslas. I see Teslas everywhere.
if this was a company that exemplified discipline already and showed that they could do, they could be profitable with what they're making and proven that they could scale, then I would say this would be a buying opportunity. But they haven't done any of that.
Well, all
Yeah.
fairness, Tesla wasn't profitable for a number of years.
They weren't, but they were scalable. Their
Oh, yeah.
business was scalable, and they were showing, I think, for a long time that there was promise. But Rivian has not done that yet.
Gotcha. Gotcha. So this news doesn't change your mind.
Right. No, it doesn't. There was exponential growth with Tesla. We were seeing um, for a very long time the fruits of the investments that were being put in. I mean, how many times did Elon have to go to investors and beg for money? He had to do it a lot, but every time he did it, there was growth in Tesla.
Yeah.
It paid off.
Yep. All right. Fair enough. I actually agree with you. I'm holding off. I'm definitely not going to call this a buy. I'm with you. Show me. Show me.
Yep.
All right. So the next company, it's kind of so it's there's arguments on stock twits about this company. There's arguments about this. If you want to see actual arguments between retail and traders, go to this company's stock twits and you'll see arguments.
We're not responsible for the loss of brain cells.
Right. So the
Anytime.
company I'm about to talk about, this was actually told to me this morning, and it was by a good friend, and the company's Nano-Nuclear Energy, ticker symbol NNE, Nano-Nuclear Energy. So what this company is, it was founded in 2022, so a brand new company, not even 3 full years old yet. And that's why there's a lot of people saying that this is just a shell company. What do they have done? They haven't really done much. They're just have these ideas and these patents and yada yada yada. Okay, all right. I watched an interview with Jordan Peterson and the CEO. I watched another interview on another show. I did not have a chance to look into the board's backgrounds per se, and that's something I like to do with a brand new startup company. I would like to see some of the board of directors have some good background at other companies. I did not get a chance to investigate that yet before we're recording today. But what this is they're planning on creating nuclear power reactors on a few different sizes, but mostly looking at the smaller to mid-size nuclear reactors. And by small, I mean, Brandon, portable. Something that and they have mentioned they have worked with some ex-military generals and so forth. Some of their aspects, some way that they have talked about wanting to go to, is being able to take one of these, plant them in the field somewhere, and have nuclear energy for a site, a forward site, or maybe a small town somewhere that needs energy in America. Something happened, and we need to produce some electricity. That's one of the ways that they're talking about using this particular thing. So one article that really struck my attention here, the headline reads: Nano-Nuclear Energy highlights recent acquisition of key worldwide patent portfolio surrounding the design of a modular transportable nuclear generator. So they acquired the patents for this mobile transport nuclear generator, and this is really where one of the areas they want to focus. Not the only area, but one of the areas. Um, they're trying to get the regulatory license and everything up to speed right now, so they could go into commercialization quickly. Some of the things that I have problems with about this. Now, again, this was brought to me by a friend as hey, look into this. Can you look into this, see what's going on? There's good things and bad things with this company, right? The problem is it's new. I don't have any earnings to go off of. They just recently IPO'd. They haven't released any earnings yet. I don't have those to go off with to really run some numbers. I do have some stats here. I'll get to them in a minute. One of the things is these patents that they've purchased and these licenses they've purchased are from companies that were actually going out of business and were selling off the company. So that makes me wonder, okay, is there actually something here or are they just trying to, is this really a shell company? And this is where you get the arguments on StockTwits between other retail investors saying, yeah, they bought patents from bankrupt companies. That means these patents are no good because why wouldn't they have done something with it if they were actually good? Yes and no. Yes and no. Sometimes you do have good designs, good patents that, you know, maybe just were in the wrong hands in the wrong company at that time. I've seen this in the medical field with when biopharmaceutical companies go out of business, they sell off some of their, patents on pharmaceuticals that actually the next company that bought them turn it into hundreds of billions of dollars. And these are true stories. So, yes, sometimes it could be just, they're in the wrong hands. One of their reactor products that are in development is what they call Zeus. It's a solid core battery reactor, and Odin, which is a low pressure coolant reactor. Each is representing advanced developments in clean energy solutions that are portable, on demand capable advanced nuclear micro reactors. Um, these are where they really want to move forward with. They also have plans for, and this is the one I'm excited about, was the nano-nuclear space. So creating a nuclear reactor that you can actually take up in a spaceship for missions to say Mars, and you can use while you're on Mars to power your station there. With Elon Musk consistently saying that he wants to have people on Mars here shortly, as soon as he possibly can. That's something that would be of interest to me as far as an investment idea. Now, what's some of the numbers we do have? Well, let's look at some of the numbers we do have. 6 month chart. The low has been in the nines. The high was $44.51. That's a big difference in just 6 months. The latest is the high. So it just gapped up. The latest is the high based off the news of some more recent patents being bought up. Market cap currently is 1.63 billion. Current EPS growth negative 71%. They've done a lot of purchasing, they've done a lot of expenditures. You could say it's a brand new company. They are purchasing, they're putting a lot of money in for research, development, commercial, getting products ready for commercialization. You can actually reason this on a very good case as to why there's no EPS growth. That can actually be justified if the product's able to be sold, right? If we actually have some kind of commercial product here soon, it's justified. Current debt to assets is 9.9%. So that's actually better than Rivian. Believe it or not, that's better than Rivian. Return on equity is negative 68%. Return on assets is negative 59%. They currently have a negative operating cash flow. Again, they have no products for commercialization as of yet.
Then
All
what?
the
Then how do we have assets? I
uh,
mean,
the
they have to
the
have
the licenses, all the patents and licenses that they own, what they're
oh
worth
paper,
versus what their debt is.
paper. Okay,
Yeah.
so take the debt to assets with a grain of salt.
I don't know. I mean, if you can sell that license for, you know, X amount of dollars, you can sell the license for X amount of dollars.
Yeah, but it's if.
If, all right, yeah. Currently negative operating cash flow because again, they don't have any products in the commercialization stage. They started trading in August of 2024. So that's when they IPO'd. They were founded in 2022. That also raises a lot of red flags. A quick turnaround, 2 year turnaround on being founded to IPOing. Is this a quick cash grab for the founders? That's what some of the arguments are on StockTwits. That's,
Absolutely.
I mean, and those are reasonable arguments. Um, so this is the company that was brought to my attention. So after doing all this research, I still have too many questions.
Yeah,
I'm
so
just
it's
gonna,
unproven. They obviously went public because they needed money for the company. It was a cash grab. Whether it works out or not doesn't matter to that question. It was a cash grab.
yeah, and yeah, I have too many questions for me to say invest in this. I would definitely say no to anybody's listening to the show. I wouldn't invest it with my own money
Yeah.
on
So
on any scale.
the money that you're investing into it is being used for the possible manufacturing of unproven products.
Yes.
That's it. Yeah.
Yeah, there's no commercial products to sell yet. They're
Yeah.
still research, development, licensing, yada yada yada. I think the stock price is going to come back down from where the high it's at now. There is a lot of possible potential here, but
Yeah,
I got to see more. Uh, I got to see more products actually being shown, being saying, "Hey, this works." So when we invested in Cooler Technology when it was a penny stock, and it still is technically, but it went above $5 for a little bit. Um, it actually had products that you could see, you could show that they demonstrated that they had products on the NASA Moon Mars lander. They had products that are working. They had commercial products, and they're growing that exponentially. There's no commercial products with nano-nuclear
right,
energy.
right.
So,
So in 10 years, this company could be big, but most likely it's going to be zero. Most
so there
likely,
you go.
most likely.
So there you go. There's Brandon and mine's opinion for those who the person who asked, and then for those who are listening. If you see something like this, I mean, the there could be good potential, but you're
Yeah.
risking the risk reward is very very high, very
And,
high
and,
risk.
and the other thing too, I mean, I always preach invest in what you know. I don't know nearly enough about nano-nuclear technology to tell you whether or not this is going to take off or not. And if you
Right
don't know enough about nano-nuclear technology, then you should also stay away from it.
there you go. That's our opinion. Thank you for listening to us. And let's move forward. Earnings this week, Brandon. Earnings this week. Couple things I want to highlight before I get into the daily earnings like I typically do here, all right? Well, actually, no, let's get into the daily earnings and I'll call these out when we get to them. We got some of the big seven coming up this week. Monday. Monday, AT&T is really the only one I'm really looking at on Monday. Tuesday, Lockheed Martin. And here's why I want to see what they say in regards to the DOGE. Are there going to be cuts at Lockheed Martin with the new Doge program with this administration? I want to see what they say in their earnings call in regards to that. Boeing is also reporting. Let's see how bad it is. Everybody's expecting negative earnings. Of course, we would expect negative earnings. There hasn't been much good to say about Boeing lately. Let's see what Bowen says on the earnings call. Am I investing in it? No, not unless it goes below 100. I might look at it.
Did you hear
Um,
any news about what caused that plane crash at Seoul International Airport and I'm sorry, Incheon International Airport in
nope,
Korea?
I did not.
Okay.
Nothing. I saw the report and that was it. And that's that raises questions as well.
Yeah.
So carrying on in Tuesday, we also have General Motors, GM, something to look at there. And then also not much else as we move into Wednesday. Wednesday in the morning before the bell. I like Cornyn. That's something to watch. Not a whole lot. I'm seeing here Norfolk Southern. That's a train transportation company. If you don't know, that will give you a good idea of how many goods are moving across the country by train. That's why you would watch unless you're an investor. That's why you would listen to that earnings call. But after the bell on Wednesday, you have Meta, Microsoft, and Tesla. All three reporting after the bell on Wednesday. That's going to be a busy day on Wednesday. What are we expecting? I expect Mark Zuckerberg to talk about how he's investing in other areas and everybody to criticize how much money he's invested in certain areas. That's usually how those go. Why is he investing so much money in this area and then it turns out to be right?
Well, they're laying off 5% of their workforce. So, I
It's
mean, there's going to be.
It's Q1, man. That's what they do every Q1.
Mhm.
January, February, they layoffs. Uh, yeah, and the big banks do as well. Goldman Sachs, J.P. Morgan, they all do it Q1. You know. So yeah, you have those three investing after reporting after bell. Microsoft, Tesla. I expect Tesla to come back down. I think it's overpriced. Still, yeah, I know. Everybody's like, "What are you talking about, Dave? It's not overpriced." I expect it to come back down. On Thursday, Altria, just because I'm a shareholder of Altria, Mo, um, I want to see what their earnings come in at. Um, Dow is reporting. That's another one to watch. Northrop Grumman again. Let's see what the department, the DOGE, if they talk about it, if it's going to have an effect on them as far as government contracts, what's going to go on there. UPS for transportations. If you feel, if you know, you want to see how the pulse of America is doing right now, UPS will let you know. Because if we're buying stuff, they're going to tell you we're going to be busy. If we're not buying stuff, they're going to tell you they expect a decline. But Thursday after the bell, you have another of the big seven, Apple. Apple's going to report Thursday after the bell. What everybody's looking for, I believe, is looking for AI news, more AI news, and iPhone data. I mean, iPhone sales in China. They lowered the price to be competitive. Did it help? Did it help?
Hmm.
So that's what we're looking at there for after the bell from Apple. Other than that, I don't really see much else I really want to look at for the rest of the week. Brandon, any thoughts on what I just rambled off?
Yeah, UPS would be great for the global economy. I They need to get their business to business portion under control and do better
FedEx
with
does better
that.
at that.
Tell you that. Yeah, they need to do better at business to business. Um, Also, customer service at UPS, but that's my own personal gripe. Um, and then Apple, I honestly think that man, I know he lives in the shadow of Steve Jobs still, but I think Tim Cook is probably the best CEO they've had. I would at this point put him above Steve Jobs. So, you
Yeah.
know, I have faith in Apple, even when nobody else does.
Let's see what they say. Let's see what they say. Obviously, Meta's beating them on headset sales. So,
Mhm.
all right. Final thoughts, Brandon.
Yeah, if you don't understand it, stay away from it. You'd be surprised about the amount of shell companies that actually exist on the stock market. I mean, there's so many companies that actually really aren't companies that are on there. So many frauds. So if you don't understand it, don't touch it.
All right. All right. Look, I think Meta people aren't going to like the earnings call because they always say Mark Zuckerberg invests too much in this or that. If there's a dip after it, and I don't see any bad news for any reason for the dip other than they're investing too much money into research, I'm buying.
Yeah,
Um,
and you know what? I expect a great number for the holiday sales for the Meta Quest. But I think everybody else already expects that too. So the bar's probably going to be set pretty high there. And if that disappoints, then you'll probably see a dip. I'm holding on to it. I'm not selling it. Don't plan on selling it anytime soon, unless, Mark Zuckerberg came on the earnings call and said, "Sorry guys, we're going out of business," which isn't going to happen. Then yeah, I'm holding on to it.
there you go. Other than that, this week I do not have any buys or calls for you. Sorry, but I hope we covered some good news and gave you some good insight and some good advice. As always, we hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.